Hey there, real estate watchers. Andrew Finney here. The housing market is giving us more twists and turns than a roller coaster at Six Flags. We're seeing plummeting sales, rising rates, and yet some surprising growth. Stick around because we're diving deep into what's really happening in the U.S. housing market right now. Today, we're covering the latest on existing home sales, mortgage rates, buyer behavior, and what it all means for you, whether you're looking to buy, sell, or just staying put. As always, I'm bringing you the most up-to-date information from trusted sources like Adam Data Solutions, Redfin, CNBC, and top financial news outlets. I comb through the latest reports to bring you the real scoop you can use. Let's kick things off with the big headlines. Number one, existing home sales have plummeted to a 14-year low. Yep, you heard that right. Number two, mortgage demand is taking a nosedive, hitting its lowest point since July. But here's a curveball. We're seeing some year-over-year growth in housing demand. Confused? Don't worry, we'll break it down. Home sale profits are still high, but they're starting to slip a bit. All right, let's dive into our main story, the dramatic drop in existing home sales. According to the latest report from the National Association of Realtors, sales of previously owned homes fell 1% to an annual rate of 3.84 million in September. That's the lowest we've seen in 14 years, folks. Now, you might be wondering, Andrew, what's behind this nosedive? Well, it's a perfect storm of factors. Number one, sky-high home prices. The median price of an existing home in September was $404,500. That's a tough pill to swallow for many buyers. Rising mortgage rates. We're seeing rates hovering around 6.5% to 7% for a 30-year fixed-rate mortgage. Compare that to the 3 and 4% rates we saw just a few years ago, and you can understand why buyers are hesitating. Number three, election jitters. Believe it or not, the upcoming presidential election is adding another layer of uncertainty. As Lawrence Yun, the chief economist at NAR, puts it, perhaps some consumers are hesitating about moving forward with a major expenditure like purchasing a home before the upcoming election. Let's put this into perspective with a quick analogy. Imagine you're at an auction and the auctioneer keeps raising the price of every item. At the same time, the cost of borrowing money to buy these items is going up. Oh, and there's a chance that rules of the auction might change soon. You'd probably think twice about raising your paddle, right? That's essentially what's happening in the housing market right now. But here's where it gets interesting. Despite these challenges, we're actually seeing some year-over-year growth in housing demand. According to the data from Housing Wire, we've had 3 weeks of positive year-over-year growth in both purchase application data and weekly pending contract data. Now, before you get too excited, let's add some context. Remember where we were at this time last year? Mortgage rates were flirting with 8% and sales were at record lows. So while we're seeing growth compared to last year, we're growing from a very low base. It's like comparing your jogging speed to when you were walking with a sprained ankle. Sure, you're faster now, but you're not exactly winning any races. Now, let's talk about what this means for home sellers. Adam Data Solutions reports that in the third quarter of 2024, homeowners earned 55.6% profit margin on a typical single family and condo sale. That's down slightly from earlier this year, but still historically high. In plain English, if you're selling your home, you're still likely to make a hefty profit. The median raw profit is holding steady at just under $130,000. Not too shabby, right? But here's the kicker, and pay attention because it is important. These high profits are a double-edged sword. They're great for sellers, but they're making it increasingly difficult for buyers to enter the market. This imbalance is a big part of why we're seeing sales slow down. Let's zoom out and look at the national picture. The U.S. median home value is holding steady at about $360,000. That's good news for current homeowners as it means your property values aren't dropping. But for potential buyers, especially first-timers, it's another hurdle to overcome. Mortgage rates are playing a huge role in the current market dynamics. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances sitting at between 6.52% and 7%. This has led to a significant drop in mortgage demand recently. Here's a quick breakdown. Refinance demand is down 8% compared to last week. Applications for home purchase mortgages fell 5% for the week. Now let's talk about a trend that's caught my eye recently. Google Trends data shows an increasing interest in rent-to-own options. This suggests that while many potential buyers are priced out of traditional home ownership, they're looking for alternate paths to eventually own a home. It's a trend worth watching, especially for investors and those considering unconventional real estate strategies. So what does all of this mean for you? Well, it depends on where you stand. For potential buyers, yes, the market is challenging right now. High prices and rates are significant hurdles. But remember, real estate is local. While national trends are important, your local market might tell a different story. Plus, with sales slowing, you might find sellers more willing to negotiate. Working with a reputable buyer agent is essential to help you achieve your real estate goals. Keep in mind, when people hesitate to take action, great opportunities manifest for the well-prepared. For sellers, you're still in a strong position with the potential for significant profits. However, be prepared for your home to potentially stay on the market longer than it would have a year or two ago. Pricing strategy is more critical than ever. Working with a skilled listing agent is vital to help you get the best price and terms available in today's housing market. For homeowners not looking to sell, this is a great time to focus on building equity. With home values holding steady or growing in many areas, consider home improvement projects that could add value to your property. Home equity lines of credit, or HELOC for short, can be an excellent way to tap your home's equity to make those upgrades you're dreaming of real. For investors, the current market presents both challenges and opportunities. With traditional flipping becoming more difficult due to high purchase prices, consider strategies like buy and hold or exploring emerging trends like rent to own. If you're feeling overwhelmed by all of this information, don't worry. That's what I'm here for. Whether you're looking to buy, sell, or invest, I can help you navigate this complex market. Reach out to me for a personalized consultation. I'm here to help you make well-informed real estate decisions that are right for you. Now let's address a question that's on many people's minds. How much impact will the economy have on the housing market? Great question, and it's one that's particularly relevant right now. The economy and the housing market are deeply interconnected. Here's the short answer. The impact is significant and multifaceted. Number one, interest rates. The Federal Reserve's decisions on interest rates may not directly affect mortgage rates, but they do have an impact. As we've seen, higher rates can cool demand. Number two, inflation. As the cost of goods increases, it can reduce people's ability to save for a down payment or afford higher mortgage payments. Number three, the job market. Employment rates and wage growth play a crucial role in housing affordability and demand. Number four, consumer confidence. Economic and political uncertainty can make people hesitant to make large purchases like homes. Right now, we're seeing all these factors at play. The key is to stay informed and be ready to act when opportunities arise, regardless of the broader economic conditions. All right, folks, we've covered a lot of ground today. If you found this information helpful, please like and hype this video and subscribe to my channel. Your support helps me continue bringing you the latest and most accurate real estate news. Thank you. Got questions? Drop them in the comments below. I read every single one, and I might even feature your question in our next video. And hey, if you know someone who's thinking about buying, selling, or investing in real estate, share this video with them. Knowledge is power, especially in the real estate market. Let's do a quick recap. Number one, existing home sales are at a 14-year low. Number two, mortgage rates are high, but we're seeing some surprising demand growth. Number three, home seller profits remain strong, but are slightly declining. Number four, the economy continues to have a significant impact on the housing market. Remember, in real estate, information is your best tool. Stay informed, stay prepared, and you'll be ready to make the best decisions for your situation. That's all for today, folks. This is Andrew Finney reminding you that in the world of real estate, knowledge is not just power, it's profit. Your future self will thank you for taking action now. Stay curious, stay informed, and I'll see you in the next video. Peace be with you.